There were 85 major legal complaints against banks between 2000 and 2008. 85 major acts. Now, if anybody else in the world committed this many issues, they'd be out of business. SEC would shut them down. If an advisor had 85 complaints, they would be out of business or in jail, right? Just that's the way it works. If you're small, the law works against you. If you're JP Morgan and you work for the SEC, when you stop working for the SEC, you go to work for JP Morgan, right? That's just the circular door between the regulators and the major banks. But 85 complaints between 2000 and 2008. Between 2008, so that's 8 years, right? 2000, 2008, 8 years, 85 complaints. Between 2008 and 2012, 4 years, there was 110 cases. Since 2012 to 2020, there's now been 204 legal actions. 85 to 110 to 204. Ongoing criminal activity at major banks. JP Morgan has pled guilty in 3 separate criminal charges for egregious years-long criminal conduct. They pled guilty to it. What was the result of pleading guilty? They paid a fine. $920 million for the manipulation of metals markets. That comes after the bank admitted anti-money laundering failings in 2014, pleaded guilty in 2015 to manipulating FX markets. Now, if anybody else did any of that, the business would be shut down, people would be in jail. What does JP Morgan get? Slap on the wrist, they pay a small fine. If I make $5 billion manipulating the FX market or the gold market, and I pay $900 million in a fine, that's a tax. That's a cost of doing business. If I can do something illegally with no recourse whatsoever other than a monetary penalty, why would I not keep doing it? If I can manipulate a market and make billions of dollars in profit, and if and when I ever get caught, I pay a small pittance of a fine, who cares? That's a write-off, by the way, on my taxes. One of the potential ramifications of this Democratic blue sweep that we're talking about is that the Biden campaign does fulfill some of their promises about more stimulative spending into the, we're going to do bigger stimulus packages. We're going to move towards universal basic income. We're going to do infrastructure spending. We're going to do all these type of things. And that potentially leads to 2 problems. One, it leads to a massive surge in the debt. The second thing is that it leads to an inflationary pressure. The problem with those 2 is that the Federal Reserve has to basically absorb that debt. So every time we issue debt right now, the Federal Reserve is having to absorb the majority of that debt issuance in order to continue to maintain their balance sheet and to provide liquidity and accommodation for the markets. And that's what's been lifting asset prices over the last decade, has been these QE programs. The problem for the Federal Reserve is if you get inflation, the Federal Reserve can no longer keep interest rates at zero. They're going to be put into a position of having to increase interest rates, which if you go back to 2018, they tried to increase interest rates in 2018 for a couple of months, and that led to a 20% decline in the market. It also says that they can't continue super easy monetary accommodation. In other words, they're going to have to start to contract their quantitative easing program to try to quell inflationary pressure. See, the inflation boogeyman is the issue for the Fed. And so if the Democratic agenda goes through and you start getting the type of programs that start to create an inflationary surge in the economy and interest rates go up, by the way, we have $85 trillion in debt currently on an $18 trillion economy. So if interest rates go up much at all, say 1.5% to 2% on the 10-year Treasury rate, you're going to have a negative knockoff effect in the economy from higher rates. Inflationary pressures go up in conjunction with higher interest rates. The Fed has to start hiking their interest rates to quell inflation, and it's game over for the market. This is always the case, right? So yesterday I was talking about moving averages and how moving averages act like gravity. And the further that prices move away from a moving average, the reason you have a moving average is because it's the average price over a certain period of time, right? So in order to have an average, that means prices have to trade above and below that average over a time frame. That's why it's an average. So I said yesterday, of course, is that the further that prices move away from gravitational from the moving average, the gravitational pull of that moving average becomes greater. Well, there's always the rocket scientist in the crowd that they like, well, the R squared of the square root of the subterranean, XY axis says that, I get it. That's not the way gravity really works. If I get into the atmosphere, gravitational pulls, I get that. We're talking about moving averages in the stock market, okay? Trying to use some simplistic terminology for people to understand how moving averages work.
Don't let science ruin a good illustration.
I'm just trying to make a point here that people can get their head around a bit.
Hey, his heart's in the right place.
Exactly. It's always the one, right? It's always the one. It's always the one. Anyway, we appreciate you very much.
We love you, Dale.
Yes, we do. We love all the comments. Now, back to the point.
Meanwhile, back on the show.
It's always interesting. The Fed kind of trots out some of their lower speakers into the economy to drop these little trial balloons out to see how the market reacts. And one of those has been that maybe the Fed will need to start tapering their quantitative easing program by as early as June. Considering markets have been running on this idea of more Fed liquidity, the Fed now talking about potentially reversing that is an interesting note.
Impossible. They may taper a little, but the bottom line is the Fed will be permanently buying Treasury bonds. Because if you look at deficits now going forward, right at the end of Trump's term prior to COVID, he was running $1 trillion deficits, or just a hair under. Mm-hmm. And that compares to prior to 2008, where we're $300 to $400 billion deficits.
Right.
You can just go back in time and, we ran a couple surpluses in right around 2000, but deficits have been rising. And then what happens is we have a recession and there's a massive jump in deficits and they come back down for a little bit and then they rise again. So this is a trend, and it's the deficits are rising faster than economic growth. Again, this is the whole productive nature of government spending that we've been talking about. Mm-hmm. And therein lies the problem. The only way to fund unproductive debt that's continually growing, in theory, in a free market, would be the market would require higher interest rates. You'd eventually go bust, because the idea of borrowing more and more when you're not making enough to pay for it eventually has an end game, right?
Right.
And that holds true for every corporation except banks and for every person, right? Mm-hmm. We all know that we can't keep borrowing without our income going up at least at the same rate. For the government, that's not true, because they have the Federal Reserve. If there was no Federal Reserve, interest rates today would be, 4, 5, 6%, whatever they would be to absorb that debt. The government would not be able to afford to borrow. The interest expense on the debt would be crippling. Our taxes would be going up like crazy to pay for this. And maybe they'd learn their lesson. I mean, this is the unfortunate part, is that the Fed enables this behavior by constantly lowering rates, by buying all the debt, by saying, it's fine, we'll buy the debt. We don't have to put it out on the market. We'll make sure interest rates are that you don't have to pay to borrow money, that the cost of money is free for you. And it just gets worse and worse, and it puts the Fed in a trap. The Fed doesn't have a choice anymore. If the Fed said, no, fund it yourself, interest rates go to 3%, this economy is broken.
They are now in the process of doing a remake of George Romero's The Living Dead.
Really?
Yeah, it's called the 117th Congress. Started today. Nancy Pelosi re-elected to the House.
That was good.
For her fourth term, along with Mitch McConnell. So
you can't kill them.
You can't. Yeah, they don't go away. And what's funny is that everybody's wanting that. It's time to get rid of the old guard. We got to clean out the swamp, and we just keep putting the same people back in. Yeah. And of course, it's going to be more like Weekend at Bernie's sooner or later when we just start propping them up with sunglasses on. So